Hi guys, Brown Asset Management here, and today we're looking at Cisco Systems Inc., ticker symbol CSCO, using my 7 simple steps. Let's have a look at the share price over the last year and a half. You can see that pre-pandemic it was around about $50 a share, then got absolutely hammered, rebounded pretty strongly, hammered again, and then rebounded even stronger, and is now actually past its 2020 price at around $51.91 a share. And just to quickly compare it to the market, I have Cisco here in the candlesticks, the market in orange, and over the last month the market narrowly beat it out. But in the last 3 months, Cisco's blown the market out of the water. Last 6 months, it's also beat the market. And in the last year, the market has beat it, but this is because of the strong growth in the pandemic. So if we look, the market was hit harder in the pandemic and then rebounded stronger. But if you look over the last 5 years, Cisco has pretty much consistently beat the market, apart from this rebound in the pandemic. Now let's have a look at my 7 steps. Cisco currently has a market cap of $220 billion in the technology sector and has a share price of $51.91. So let's have a look at step 1. So is the PE ratio less than the market? Cisco's PE ratio is 21.72 and the market with an average of 40, so that's a pass. Is it lower than the sector? And the sector of tech is very high, so Cisco has a very low PE ratio compared to its companions, so that's a pass also. No bonus mark as it is above the historical average. Now we want to see if the revenue is increasing, and these numbers are from 2017 to the present, and it's gone from 48.005 billion to 48.026 billion. So that is a pass. The revenue has increased. Now we want to see if the profits increased, and the profit has gone from 9.6 billion to 10.1 billion. So that's a pass as well. Step 5, are the shares outstanding decreasing, and Cisco are buying back their shares, 5 billion to 4.2 billion. So that's a pass. Now, are their current assets greater than their current liabilities? And that is 43 billion to 25 billion. So that's a massive pass there. And if we compare it to their total liabilities, not a bonus mark, but you can see it's 43 billion to 56 billion total liabilities. So that is very, very good from Cisco. And finally, is the free cash flow increasing? It's gone from just under 13 billion to 14.3 billion. So that's a pass. So once again, that is 7 passes out of the 7. Great news for Cisco, looking good fundamentally. And if we look at the free cash flow yield, we have 14 billion in free cash flow compared to a 220 billion market cap. That is a percentage of 6.5%, which is excellent. And with a free cash flow ratio of 15. So that means normally I'm looking for stocks between 3 and 5, and with 6.5, this means that it has got a very good price compared to its free cash flow. Cisco does pay a dividend, and the dividend is $1.48 a share, which is an annual dividend yield of 2.85%, which is excellent, and it has a 3-year dividend growth of 26.55%. So Cisco does like increasing their dividend. It's a very safe dividend, 38% of the free cash flow, and it has 7 years of consecutive dividend growth, which is good to see that they are increasing their dividend. Cisco is paying out the next dividend on April 28th, so if you bought the shares before the 5th of April, then you'll be eligible for the dividend, but if you buy the shares now, you'll be eligible for the next dividend, which will probably be sometime in July. So now we're going to have a look at some analyst ratings, and TipRanks has Cisco at a moderate buy with 19 analysts in total, 11 buying and 8 holding, with a current upside in the next 12 months of 2.5%, which is a target price of $53.20. But on the high side, they have highs of 63, so that would be an excellent return there. And if we head over to Simply Wall Street, Simply Wall Street uses discount free cash flow and has a fair value of $70.29, which is a massive 26% upside from its current price. So now to head on to my valuation, I have a discounted free cash flow model and the Buffett-Graham intrinsic value. And for the discounted free cash flow, I've calculated the future cash flows. You can see here that these numbers are pretty fair in my estimations, and this would give a calculated stock price of $87 a share and 88 cents, which means it's currently trading at a 69% discount. So discounted free cash flow really likes this stock. And if we look at the Buffett-Graham intrinsic value, this actually gives it a fair value of $49 a share and a Graham price of 37. So the Buffett price is saying it has a fair value around about where it is right now, so it's not saying it's saying it's a hold, but the Graham price is looking for a price where you'd want to buy it and hold it for 20 years. So $37 a share is a bit low for Cisco at the minute. If we look back on the charts, you know, if you were to buy it in November, then that would have been an excellent purchase there, and that's when the Buffett-Graham intrinsic value would have really highlighted the stock to you. And if you bought it then, you would have made, you know, $15 a share, which is an absolute massive profit. So if we look at the technicals here, I have Cisco's price over the last year. I have a 50-day in blue and a 200-day in gold. And if we look more recently at the very bullish signals, you can see the price crossed both of the moving averages in November and December, so they were strong buy signals then. golden cross there in January, and right now you can see that the 50-day moving average did provide a bit of support. Once it hit there, it didn't break through and then burst on them there to its highs of 51. So the 50-day moving average has acted as support in recent times, and you can see these lines are diverging here. So very bullish signs according to the moving averages. And just looking at a parallel channel here over the last 6 months, you can see that it's really been contained in here, hasn't really broke above or below it, and it is trading at the higher side right now. So there is some room for growth to around about $54 a share, but if the share drops to 50 or as low as 47, then there will be definite buy signals, as it has had some support at this level before. So definitely some room to grow, and if the shares drop at all, then definitely buy them at that price. And finally, just trying to identify some support and resistance over the last year and a half. You can see that this was the floor in the pandemic, and if it's got anywhere close to this, it's definitely had some support at this level. And you can see here some other lines as well. So it did break through this support line in November, and it also broke through a previous line of resistance here. So this has been a strong line of resistance going back to 2019, and it did break it. So the only other line of resistance that comes close is at the highs in June 2019. So if Cisco could go to there, that would be excellent, but it has broke its previous lines of resistance. So once again, looking very bullish and very positive movements on the stock. And just finally, I'm just going to show the all-time chart here. You can see that Cisco, if we ignore this massive .com bubble here, it has been going at a pretty fair rate the entire time. You know, there'll be a pretty solid line going through this entire thing. But if you bought at the peak of the .com, that was around about $76 a share, and it is not getting to there, but it is getting close. So be wary of bubbles. That's my short message there. Right guys, I want to thank you for watching. Please leave a like if you enjoyed the video, give a comment on your thoughts on Cisco, and consider subscribing for more stock analysis videos, and I'll catch you guys next time.